Traders, welcome back. Todd here. It's a Tuesday, and virtual prop trader dynamic structure trading is back. So welcome back. This is your market outlook for September 9th, 2014. It's 8 o'clock in the morning Central Time. We roll these out in the mornings. The primary thought process here is let's get you the information that's relevant for today. Let's update you on current positions as well as show you what we're looking at, where we're looking to take action throughout the day. We then will jump into our DST Live trading room, VPT Live, where I will give you some information, show you setups and signals, teach and train in the futures markets. Rod will be trading the futures markets. He runs the options desk for the PEP program as well as funding traders. So more on that to come. So as we get rolling here, we'll welcome Rod in, and we're going to take a look at a couple of different things that we've already got out there in the marketplace as far as trading signals. Good morning, Rod. Very well. The first week of football is out. I had college games. I got pro games. And, of course, Monday Night Football rounded out week one. Could not be happier. Megatron tore it up last night. Let's take a look at a couple of things. You got a natural gas that we need to update on real quickly. So, gang, let's take a look at UGAS. This is a classic dynamic structure trading signal. First of all, we started off with the double bottoms right here. We played that using options, so buying calls here. Then we rallied back into structure resistance. I got a qualified sell signal right here on this day. Now we've got another qualified triple bottom buy. As Rod mentioned, we closed at 1426. Right now in the pre-market, this stock is up 5.6%. It's trading at 1506. So at 8:30 a.m., we will see this thing gap higher into about the 50% retracement of the last leg down right here. Rod loaded up on the call options, so he's basically long the stock. Oh, okay, gotcha. My apologies. Okay, so we bought the stock down here, and obviously, again, on the gap open, probably an opportunity to cover half. A natural technical trading thought process would be any test of this $16 handle, a good area to take partial profits just in case it does roll back over. And then finally, let's come over here. We'll pull this down, and technically, I'm going to take a Fibonacci extension right here. I'm going to left-click at the lows, invert this, left-click on the highs, we'll measure that leg, and then a $19 target 2 would be a reasonable expectation at that 1618 fib extension. Okay, bud, let's go ahead and walk through some of the other stuff that you've got rolling. Okay, so Apple right here, technically speaking, let's go ahead and let's run our fib retracement. Look left. Okay, we've got a swing low to this new structure high right here. We've pulled back in. Our 50% Fibonacci retracement so far is holding. Apple's trading slightly higher in the pre-market, $99, basically up 0.6%. So we'll see what happens right here. I'm going to go ahead and minimize this. We're going to pull in this, and let's take a look at Apple on this different time frame. Now, a lot of times what we'll do, gang, is we'll come down into 39 minutes. Rod likes a 39-minute intraday. We'll look at the 3-minute chart as well to try to find some intraday opportunities. So I'm going to go here, come down to a 39-minute. Again, watching for qualified signal. Okay, there we go. So Right there, we talked about buying the calls. Had beautiful profit on those calls last time as well. And again, 98.34, we see a beautiful descending wedge. High-to-high trend lines right here, pressed against horizontal structure support at a key price point. And again, it's moving higher right now, trading around $99, likely to open at around $99 back into that key resistance. Okay, bud, what else you got? Okay, so he's giving himself some time, but we popped right there, and we popped right into a technical resistance zone. So we'll go back to our Fibonacci. We're going to go fib extension. I'm going to take the swing low to this impulse high prior to the retracement right to here, and you'll note that we rallied right to the 1414 Fibonacci extension. We're trading 46.45 in the overnight, so it's about where it closed yesterday. The 1618 fib extension is right here at 47.46. So plenty of room right there. And as Rod said, he's bought himself some time by going out to October. So a fade back into this 45.40 area, down to 44.66, highly likely. Beautiful symmetrical double top right here. And then, Rod, I'm guessing this is some type of news that you're not really buying into? Beautiful, beautiful. Okay, so there's Softy Gang, MSFT, again, short through a put position on the options. What else, bud? You got your second one? GMCR, you have crushed this stock. And then what's our time frame there? You can pull part of that, one side of that off, I think you mentioned last week. Beautiful. And gang, the repair strategies that Rod walks through are really, really impressive. It's a little over my head. Certainly, I'm not an options guy at all. He's teaching me as we go. So right now, I find a technical position that I like for a long entry. We simply buy basically in the money, at the money calls, 50 delta. If I like a short, we buy puts. That's it. But we will be getting into more of this as we go in VPT. So the options desk will do some training. All right, now let's just do what we typically do here. Let's just go grab a quick overview here. Here's our diamond. We've got potential setup and signal. Gang, as you know, I love dynamic structure trading. Teaches us how to take advantage of symmetry, tops, bottoms. So this is not only a key price point in the diamonds at the 171.50s, but this is a classic symmetrical double top with overbought bearish divergence. We see it along all of our indicators. So right here, we're looking to buy puts possibly for a bearish strategy. We're already down $1. We're trading at 170.66, so closer to the swing lows down here. Obviously, if this horizontal support line gives way at 170, we're likely to see a minimum pullback to a 50% fib, which also is in line with structure support as you look left at the 167s. Let's go take a quick look at spiders. Same visual right there. So I think we talked about buying some 200 puts right here. Let's take a quick look at QQQs. And now you notice that both the QQQs and the spiders had taken out previous swing highs that were set right there in late July, whereas the diamonds had not taken those out. And then IWM, which Rod put on a powerful position several days ago, actually last week, that thing never even got close to the previous swing highs that were actually put in at the beginning of July. So there's IWM right there. Now, Rod, let's take a quick look here. I think that we will pull up our 39-minute chart. We'll go to IWM here. And then you can talk a little bit about any updates to this put position that we put out. He bought puts originally here, gang, around August 25th, 27th on this high. We talked about the adverse excursion add-on right here. And then obviously we've pulled back down. As expected, we found some support at the 15.5 level. So we'll see what goes on here. We're trading 16.28 pre-market right back down into this region. But this 15.5 is still holding. So if we get below that, big time in the money. Go ahead. Beautiful. Okay, so let's minimize this guy. Go back into kind of our daily time frame. Our visuals all set up here. Let's go take a look at TLT. TLT finding support right here, gang, at the 116. We're going to gap down slightly. So, Rod, I don't mind a gap fill here. We're at a key level of support. So, previous resistance, anticipated support. We're gapping lower, potentially. So we might look at some TLT calls right there for a potential retest of the 119 handle. Gang, I wanted to also just point out here, come over here, grab your arrow. So we took swing low to this new structure high. I measured that with a Fibonacci retracement level. The 50% fib is right here basically at 114.90, 115. I also did this leg from this swing low to this new structure high, measured that, and we're at the 618. So again, this produces a point of confluence where these two technical levels come together. We've gapped lower, so we're trading right here around the 115.40s in the pre-market. So this is a low-risk, long entry right here. If I were to buy the stock at 115.40s at the open, my protective stop would go below here. So that's about $2.50 of risk. If I were to buy the stock here, I'd anticipate a retest of this swing high. So from 115.50s to a retest right here would be $3.50. So my risk-reward ratio is 1 to 1.4. Then the extended target on this would be a third leg up. Now, in order to identify that third leg, I'm going to take the value of this swing low to this new structure high. I'll go vertical right here, drop it in, and then we're going to pull this over, and we're going to say if this leg duplicates itself right here, that projects to approximately 122. Which obviously from the 115.5 is $6.50 or greater than 2 times our initial risk. So that's what that trade setup and signal would look like. That's TLT, that's the daily bar. Because of the time it took from this market to move from here to here, it would be approximately 21 days or basically a full trading month to see that move to that new level. All right, TLT, let's go look at GLD. It's been gapping all over the place. We have a key price point here, point of interest, back into this 119 to 19 half zone. We've been in a steady decline right here with a big move yesterday. It was a gap and go that closed in the bottom 20% of the candle. So we'll be alerted at 119 to 19 half, kind of paying attention to this handle over here. Last line of defense here or support for GLD. Initial targets on any long entries here would be back into this 122.50 handle. Doesn't require a massive stop right there, maybe 2 ATRs on the stop initially. As Rod mentioned, USO, UNG, we saw the move down here. We're anticipating anything down into the $33 handle on the USO will give us some interest. US October 18 puts. Rod, go ahead and walk through where those are now if you want to update that. All right, beautiful. Let's take a look here at EEM. We liked the double tops that this thing was putting in. We got a little bit of a pop right there. So again, it hasn't been a massive directional move, but this is the same visual, gang, that we saw earlier. Remember, Rod was fading the pop in Walmart. If I take the swing low here to that new structure high as I look left, again, I want to grab a static leg. You'll note that this popped right to the 1414 extension. So this is the same literal setup as what we looked at in Walmart. Okay, we took out the double top, we made higher highs right into that 1414. We've pulled back right now. It's going to gap lower to $45. We're going to open somewhere near here in about 12 minutes. Okay, so EEM right there, if you bought the puts, probably an opportunity to take partial profits. We are still fighting the uptrend. Our low-to-low trend line has held every retracement, and then obviously we've seen resistance on every advance. So it's a beautiful, nice bull channel that's just rolling right up this high-to-high trend line extension here. And then we've got a low-to-low trend line extension here that's containing all price action. That's got to be difficult to see, so let's go here, 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 and here. There it is. So there's our bullish price channel right there. FXI, Rod loves FXI, DXJ when these guys pop. We had the symmetrical double top. We did not get a break below, close below, and now we've got an island gap. It's just a gap. We haven't really been able to continue that directional move. China's been on a rally. Rod, do you have anything you want to watch on FXI? Okay. Yeah. So gang, one of the things we like to do is, as Rod mentioned, go out to the weekly. So, you know, we look at higher time frame HTF analysis, and then what we do is we basically roll right down. So you'll note what Rod just mentioned. Let's go ahead, let's look left. This is the thing that we loved about this option first, is that this swing resistance level right here on the weekly, look left over here, we had this relevant market structure support. So we're buying puts based on that big, massive weekly area. Okay, so obviously we've given it some room and we've given it some time. What he just mentioned was if this thing continues the rally, then where's it likely to head? Well, look left. This guy right here is at $46, so that's where we're likely to see this thing go to next. So this is a little bit of a magnet if we break above, close above, and if not, and it rejects this price like it did here, then obviously we've got a beautiful level of support all the way back into the $32 handle. This was the reason for the sell signal, was that massive weekly resistance level. Symbol. Okay, so this is very little technical. It might be a little. Now again, gang, what we look at right here is purely technical analysis based on indicators. But Rod also has ways to quantify interest in stocks by watching bid-ask. He looks at the size of the orders that come through on the calls and puts. And again, because of his 20-plus years experience in the options market, he can tell institutional buying and selling, retail buying and selling, and basically has ROE, or again, rules of engagement for that. So he's fading this rally right here, and then he'll look for some type of retracement. And again, because of the volatility that he mentioned, the ATR, just a 2-day pullback right here could represent, you know, a $7 to $10 move and be a really nice payday. So as he mentioned, this is not for the faint of heart. It is an aggressive day trade right there. We see a 39-minute overbought bearish divergence, symmetrical double top here. And again, this is a new issue. So GoPro just went public. It's only been trading for about a month and a half. Okay, so again, very aggressive. Beautiful. And Momo is a really key technical term, gang, by the way. We'll be doing Momo stocks in the future as well, but there are different ways to identify that momentum. And there will be times when we actually participate, when we'll buy calls back here. We've got some different filters as well as some different scans that will allow us to identify high probability pops that could occur over a 2 to 5 day period. More on that later. Let's go just take a quick look here. Amazon, we've got 5 minutes until the open. I'm going to go back to our daily chart here, gang. That's the 1 hour. Let's go daily. We had a beautiful sell signal in this quite a while back. I talked about buying the puts back here. It was a gorgeous ratio or pattern trade. Right over here, you look left, we had our X to A impulse. This actually came in to be a beautiful pattern that one of the guys, Darren, in our office came up with. We went right to the 127 extension, and then bada bing, bada beautiful, an ABCD termination. As you can see, it was prior to an earnings report, so this was a qualified technical sell signal about 3 days before earnings. Obviously, earnings helped tremendously as this thing rolled over. Since the rollover right there, you see that investors weren't buying the news and in fact bought the stock, and we rallied back up to this 342. So we'll continue to watch that. Any retest of this 360 handle, we might look for short entries. Google rallying back to a point of interest right here. We saw the 572s like that. We issued buy calls right there. Now we're going to see that we've got a potential ABCD termination point back into this resistance high. So come over here. Beautiful thing about this, right here is my Fibonacci circles, trend-based fib lines, fib times. Here, however, I go grab the ABCD pattern. Left click here, come up here, there's B to C, and then where would my AB equal CD? So right there's a 2.0 move back into structure resistance. Look left, and you'll see right there that projects right around the 613.50s to 615 previous structure resistance. So we might look at a short entry around that 615 handle. There's a beautiful example too, by the way, of a symmetrical double top and then the rollover. All right, real quickly, let's go Celgene and we'll look at Gilead, two stocks that Rod likes to watch. Gilead, we looked at the qualified sell signal. Again, I want you to see these. This is up here at a 1618 extension. It is in new territory, right? This is rarefied air up here, no man's land. But we had a technical sell signal, overbought higher low, bearish divergence, SOS4 against that area, and then obviously we can buy puts. We saw a nice 4-day pullback, kind of stuck like Chuck right now. It's going to open where it closed yesterday. Nothing else going on there. This same type of signal right here, we were having a look at this guy at around 94.60s to $91. We did not quite get there. Rod, did you buy calls when this guy was pulling back here intraday? Okay, gotcha. Quick look here at Facebook. We got the pop. We pulled back in. We did fill this gap right there. We missed this opportunity to buy the calls, although it did take 3 weeks. Now we're on to new structure highs. It's going to open again near where it closed. So Facebook right there has made new highs. I got nothing there for now. Let's take a quick look at Netflix. Yeah, there's our symmetrical double top. Buy the puts right here. 2 days, quick pullback for the payday. And now we're going to basically open above this swing high right there, or close to it, at 45.77. It's up 1.3% prior to this morning's open. And then finally Tesla. This is, again, a real aggressive stock. We talked about buying puts right here. This symmetrical double top. Oh, okay. Hang on one second. Let's do this. Let's minimize that. Okay, let's go back into futures here, gang. We're 1 minute from open. Now do you got it, Rod? Okay, beautiful.